one of Wall Street's major indexes is facing major changes. The Dow Jones Industrial Average is replacing 3 of the top 30 companies it tracks. Joining us live is CCTV correspondent Liling Tan, who's here to talk to us about the big change. Hi, Liling.
Hey, Karina. So to understand the significance of this decision, we have to go back and take a look at what the Dow Jones Industrial Average is really supposed to be, which is an indicator of how major companies are influencing the U.S. market. And that shows actually that the Dow is moving even further away from industrials and closer toward finance. And sticking with the tradition, with the earnings season tradition, let's begin by taking a look at Alcoa.
Once the company that kicked off the U.S. earnings season, now Alcoa's been kicked to the curb, so to speak. But the Dow's move to dump Alcoa hardly came as a surprise to many, nor did the decision to strike Hewlett Packard and Bank of America off the list. The reason? All 3 companies are the lowest priced stocks in the Dow.
I think the 3 deserve to be kicked out for different reasons. I mean, Alcoa is by far and away the most obvious candidate to be replaced. I think it was in there because it was among the oldest companies, longest serving members of the Dow, but it actually is a very small company.
The steelmaking giant, which was added to the index a half-century ago, has seen its revenues shrink because of a steady decline in aluminium demand. Computer company Hewlett Packard joined the Dow in 1997, but has been struggling for the past 3 years. Bank of America, relatively new after becoming a member of the Dow in 2008, continues to fight legal battles stemming from the financial crisis. But what about newcomers Goldman Sachs, Visa, and Nike? Well, their addition would increase the influence of financial companies in the Dow, particularly with Goldman, which is the 5th largest U.S. bank by assets, and Visa, which operates in the finance, technology, and consumer sectors.
Goldman is an interesting one because when you really get into it, it is enormously profitable. The correct way to look at Goldman is not earnings alone. It's, I think, earnings per employee or per average employee. And that statistic is off the charts high. Last time I looked, it's about $500,000 of profit for each employee.
Goldman, trading Tuesday at $165 would be the 3rd most important stock in the index. Visa would rank 2nd, according to BTIG strategist Dan Greenhouse. Visa was trading this session around $186. As for Nike, it's a brand with global name recognition and currently priced about $68 a share.
And the move is likely to affect the Dow's the stocks that are being added more so than the stocks being subtracted, adding luster to already strong companies. And they would also account for a greater share of the Dow Jones Industrial Average. And Karina, this is partly why critics such as Charles Ortel, whom we heard from earlier, say that the Dow isn't that accurate a measure of the market, because by removing companies like Alcoa that are doing badly, it is essentially engaging in what statisticians and scientists call selection bias, in this case, a bias towards stronger companies. And an index that would better reflect the market would be one that also arguably includes stocks performing poorly.
That's right, and that's why a lot of investors prefer the S&P 500. They think it's a better reading of the U.S. Market. Now, the Dow is a price-weighted index, so why not include some of the big heavy hitters like Google, which is trading at about $900 a share, or Apple, which is trading about $500 a share?
Excellent question. Well, it's precisely because it's price-weighted that these companies are not included. Now, without getting into the math, let's look at the 30 companies under the Dow Jones Industrial Average. Among them, the highest price is IBM at around $190, followed by Chevron at about $123. Apple is trading around $500. Google is trading around $900. So including these 2 companies in the Dow would severely distort the average.
Great stuff. Thank you so much, Liling, for joining us tonight.